What's good, everybody? Welcome to the Coin Junior channel, and today we're gonna be going through an important news. Tomorrow or the day after, it's gonna be the FOMC meeting. Okay, so are the interest rates are gonna go up again to fight inflation? We'll never know. We'll have to wait and see what is the outcome of the meeting. All right, so let's take a look right here. The Federal Reserve seen aggressively hiking the interest rates to 5%, triggering global recession. All right, so survey of economists see 75 basis point hike, which means 0.75%, then slowing down. All right, so they want to make sure that the inflation rate is back to 2%. All right, right now it's around 8.2%. All right, so the Federal Reserve officials will maintain their resolutely hawkish stance next week, laying the groundwork for interest rates reaching 5% by March 2023. All right, so they want to make sure that the interest rates are high enough to make sure to, in order to push the inflation rate down. All right, so a lot of the economists, analysts are predicting that the Federal Reserve will hike another 0.75% increase to the interest rate. All right, so the Federal Open Market Committee will raise rates by 75 basis points for a fourth consecutive meeting when policymakers announce their decision at 2 p.m. in Washington Wednesday, the survey found. So we'll be getting the news around Thursday in Malaysia. So why is this significant? All right, so if you guys watched my previous videos, or if you guys just watched this video, to briefly explain why this interest rate hike is so important for all of us to take note. All right, it's because if they raise the interest rates, all right, a lot of people are gonna escape risky assets because they can't afford to buy risky assets at the current moment. All right, because if you raise the interest rates, it will make it harder to pay back debts. All right, harder to loan out money, harder to borrow money, harder to buy stuff, or just go on with your regular life. Everything will be much more difficult because everything is getting expensive, right? So a lot of people will need liquidity. They will need cash in their hands. All right, so a lot of people will escape risky assets. All right, so maybe it's because of the FOMC, which is kind of the news going around, and because people are expecting a lower rate hike, or the Federal Reserve might pivot. I don't understand what's going on in the market because everything is going green. So look at BNB, up 20% in the past week. Ethereum up 20%. Bitcoin is just doing Bitcoin stuff, all right, which is kind of insane. All right, a lot of the coins are actually going parabolic at the moment. Solana, Cardano, mwah, beautiful. Polygon, Polkadot, meme coin, all right, Tron, Avalanche. Look at this, everything is going green. I feel like everybody is anticipating a lower increase of the interest rates. That's why people are buying in, or maybe it's just another, pump the news and then sell the outcome kind of stuff. So I'm not gonna go deep into it because I'm not an analyst, I'm not an economist, so I'm just saying what I'm thinking. All right, so let's go back to this thing. Rates heading to 5% in 2023. Economists see 75 basis point hike, then downshifting. Fed funds rate estimate in October survey. Okay, so in the October survey, a lot of the people, economists, are saying by March 2023, the interest rates will hit 5%. They want to hit that 5% goal. Okay, and afterwards, if the inflation rate is being pushed down effectively, they will start to pivot, which means that they will start to cut the interest rates, or they will just start slowing down the rate hikes. All right, so you can see right here, this is their prediction, and this is the projection where they're just gonna slow down the interest rate hikes to, just get the economy back to where it was. All right, it is simple as that. Economists see the Fed as determined not to pivot too soon as it fights against an inflation rate at a 40-year high. All right, so everywhere is battling inflation rate. Okay, and the eurozone, I just read the news. The inflation rate in the eurozone actually hit an all-time high. Okay, is it today or yesterday? I'm not sure, but I'm gonna put it right here. All right. Okay, the eurozone, their inflation rate is going insane. Okay, it's going insane. It is much worse in Europe. All right. So inflation pressures remain intense, and the Fed is set to hike by 75 basis points in November. All right, so they're just gonna continue hiking the interest rates to make sure everything is according to plan, I guess. 3/4 of economists expect a U.S. recession. Soft landing 5%, 75% recession. Okay, soft landing, which means it's kind of a smooth transition where you don't feel anything as a consumer or as a retail investor. It's just like, okay, it's just a normal rate hike. Everything is just, okay, everything's a bit expensive, but it's okay. Recession is like everything I can't buy. Okay, I can't live in this planet anymore. That is a recession. That is where everything is gonna go mayhem. Everybody is losing their jobs, losing money. The stock market will crash. It is gonna be terrible. Okay, and 75% of economists actually predicted a hard recession. Oof, tough. All right, but we'll see how it goes. Hopefully, everything will be fine. It's hard to say. What Bloomberg economics say. Okay. All right, let's go. The economists see the Fed as potentially over tightening. The median economist would set a peak target rate at 4.75%, and 75% of the economists said there's a greater risk that the central bank will raise rates too much and cause unnecessary pain as opposed to not raising enough and failing to contain inflation. So there's a lot of conflict of interest going on. So in the Fed, they are determined to raise the hikes to fight inflation, all right? But a lot of the politicians, a lot of the economists are saying if they raise it too quickly, a recession is bound to happen, okay? And we can't avoid it because the pace the pace that they're setting right now in raising the interest rates is too fast and too soon and too fast and too hard. Okay, so it's gonna ultimately trigger a recession. All right, so it's really dangerous. But then, with the inflation in hand, you can't blame the Federal Reserve for doing their job. This is just my opinion. All right, this is just my opinion. I understand what they're trying to do, but then, yeah, it's kind of hard to pick a side. And honestly, I'm not gonna pick a side. All right, everybody have their own opinion. I respect every opinion, but it is what it is. Fed seem more likely to, what is this? Over tightening. All right. I can understand. But with inflation this bad, yeah, the Fed has to do what they have to do. All right. It is what it is. Okay. So let's take a look. So the FOMC meeting minutes is at November 1st and 2nd, so which is around Thursday in Malaysia. So I'm kind of excited for that because I know the market is gonna react negatively. All right, 80% of the time when they hike up the interest rates, the market just goes red. But at the moment, a lot of the people are enjoying gains. All right, and sooner or later, people are gonna sell. All right, so that is what I'm expecting because this is gonna be a bull trap, at which I said it in my previous 2 to 3 videos, right? A rally is coming. A lot of people are gonna get trapped. So be careful, take any gains you can get and get out. All right, but this is not an investment advice. Do your own research like how I did mine. I'm not asking you to sell or buy now. Do not FOMO, do your own research, and let's just see how it goes. All right, but that's just my prediction. If you can, always lock in gains. If you make profit, just lock it in. That's just my opinion. Don't just sit there and just buy the top and then just be like, hey, I'm gonna ride it through. No. Be careful. All right. So you can see right here, important upcoming events for November. So the 1st and 2nd of November, the FOMC rate hike, which is, we just covered just now. The 4th of November is US payrolls. I don't understand what is this. It's okay. And this is one of the most important ones. The 8th of November, US midterm elections. So this is where I believe the market will go green, because as we know, politicians, they will want to take credit for every good thing they have done. So let's think about it this way. Do you really think if you want to appeal to the people, are you really gonna let the market go red and then you stand on a podium and be like, the economy is not doing so bad, right? We did everything we could, but then the market is crashing. There's no way. There's no way they're gonna let that happen. So the US midterm elections, if it's nearing these elections, trust me, the market will go green. Somehow they're gonna take credit for being as the savior of US economy. All right, so you guys know what I'm talking about. All right, and the 10th of November is the US CPI, which is the core inflation rate report. And these are the important dates that you guys have to take note, because it correlates to this thing. All right, it correlates to risky asset markets. Okay, and yeah, are you guys ready? I am certainly not. I'm kind of anxious, but I'm kind of excited to see where is this gonna go, because if it goes down even lower, bet money I'm gonna buy more. All right, because it's a good opportunity to DCA, to get more, and just hold it, and let's just ride a wave through. Okay, so I guess I'm gonna end my video right here. So thank you guys for watching. Remember to like, subscribe, and hit that bell for more updated videos, and check out my YouTube shorts and follow my Twitter, guys. Thank you so much. All right, so I think I'm just gonna continue to update some of the news for tomorrow and the day after. All right, so I'm gonna cover everything so you guys won't miss out. Okay, so just a quick run through. The government of the United States are expecting to hike 0.75% hike on the interest rates. Okay, so that is all, and thank you guys for watching. I'm so sorry for that run through just now. That was kind of shit. All right, but thank you guys so much for watching, and peace.